In this Binance app spot trading tutorial, you will learn how spot trading on Binance works and what are the different types of orders. To access the spot trading, click on Trade and make sure you are on the spot section. With super simple words, spot trading means exchanging one crypto for another. On the left side, we have the order book, and on the top, we have the asks in red, and below we have the bids in green. On the top of the order book, you can select the asset you want to trade. There are different categories. For example, you can see all Bitcoin available pairs, and if you want to trade, for example, Bitcoin to USDC, you can search for it, and if you click on it, it will be opened and ready to trade. You have the option to look at the candlestick charts, but on the Binance app the chart is quite limited. Even you can put some indicators and you can modify them by clicking on that icon. As well, you can draw over the chart, but for drawing purposes and technical analysis I use the Binance.com browser on my computer, where I can see much better on the big screen. From the three dots you can transfer crypto, deposit crypto, or you can watch some of the tutorials that are prepared by Binance itself. Now for the spot trading, we have a few different orders such as limit order, market orders, stop limit and OCO. So now I will explain each one in details, and I will demonstrate how these work with actual examples. And yesterday I recorded an example when I was buying Bitcoin, so here it is. Alright, so now I will execute a market order in the spot trading on the Binance app. The price of Bitcoin is about 32,200 and it is lower from the level where I wanted to buy. So with the market order, I can buy at the current price, and I have two options. I can select the amount of Bitcoin I want to buy. For example, if I want to buy 0.05, I can see that this will be about 1,611 USDC. What I can do as well is I can select the total amount I want to spend. For example, I will be buying Bitcoin for $1,000 or 1,000 USDC, and for that amount at the current price I'll be getting 0.03101. Right below we have the option to select 25%, 50%, 75% or 100% would be the case where I'll be spending the whole amount of USDC that I have available in my wallet. Alright, so what I will do, I will stick to $1,000 and I will hit on buy Bitcoin. The order was executed immediately, and if I go to the trades history, you can see that I have bought 0.03098. The price increased a little bit with about $60–70 while I was explaining, but that's the risk when I'm recording videos, right? It could have been on a worse price, but I never regret about that because I enjoy recording videos and sharing my trading with you guys. Now going back, you can see that I have available 3,108.48 USDC left on my wallet that I'll be using for the next trades. It's that easy. You either enter the total amount of the asset you will be spending, in this case it was USDC, or the amount you want to buy, in this case it was a Bitcoin. Now I continue with the next type of order, and this is the limit order, which actually I use the most with my trading strategy. So here I have the option to set a price where I want to buy, and it should be a price lower than the current market price. I can enter the amount of Bitcoin I want to buy or the total USDC or USDT I want to spend. Now if I click on the small information icon, you will see a very nice explanation coming from Binance, where they say a limit order is to buy or sell at a specific price or better. Very important, or better. So you see the small illustration over here. If the current price is A and the price goes up and down, we can set a limit order at price C. So whenever the price goes to that level, we will buy. The Binance app will automatically buy. For example, with my strategy, the next level where I wanna buy is 28,946, or this is the level where Bitcoin would drop 40% from the recent high. And I will demonstrate it to you right now. Here I will enter the level where I wanna buy. It is 28,946.25, and now I can select how much I want to buy, or I can select how much I want to spend, and I'll select $1,000, and you will see that it automatically calculates how much Bitcoin I'll be getting at this price for that amount of money, right? And then I will hit on buy Bitcoin, and you will see that I have it below in my open orders. It is a limit buy order at the price of 28,946.25, and if Bitcoin drops to that level, I'll buy for 1,000 USDC. And because I wanted to make it clear for you in this video, I will place one more pending order, or if this is Bitcoin drops 50% from the recent high, I want to buy for another $1,000, and this would be the price of 24,120.21. And if I enter the amount of 1,000 USDC, you will see that now for that amount of money, the 24,120, I'll be getting 0.0445 of Bitcoin, right? Because I keep the same amount, but the price would be lower, so I'll be getting more Bitcoin. And again, I will hit on buy Bitcoin, and you will see that I will have both orders over here. And that's the beauty of using limit orders. Once I set the levels, I don't look at the charts with days. I know my orders are there, and if the price reaches these levels, it will buy automatically for me. I'm putting away the emotions, and I follow the strategy strictly. The third type of order is stop limit, which combines a stop price and a limit price. Now there is a good information from Binance. If I tap on the small info button, you will see the illustration, and I will just try to make it a little bit clearer now because it might be a little bit complicated if you're a beginner. Let's say the current price is A. You can set a stop price that will activate the limit order, and your stop price could be higher at B or it could be lower in C. So let's say you pick up B and you want to buy, let's say, Ethereum, because by the time I'm recording this video, the price of Ethereum is in this range. So what you can do is set a stop price at B, and if the price reaches to that level, it will activate automatically a limit order, and the limit price could be lower at B1 or it could be higher at B2. So for example, Bitcoin currently sits at 29,654. I can set a stop price at $30,000, which means that if $30,000 is reached, I can activate automatically a limit order that you already know at the price of $29,000, okay? And then I can set the amount, for example, 0.1 of Bitcoin. You will see that I will need 2,900 USDC. So one more time, it depends on the strategy you use, but if you want to see the Bitcoin first reaching the 30,000 or retesting the 30,000 again, and then you'll be happy to buy it at 29,000, then you can set up a stop limit order, which will activate a limit order if it reaches $30,000. I hope I made it clear. If not, make sure you tap on that small info icon and see the information written from Binance. Next, we have the trailing stop, which has a really complicated explanation on Binance, so I'll try to make it way clearer. Now, if you have experience with Forex trading, MetaTrader platform, or any of the other trading platforms, you probably have an idea what the trailing stop is. but I won't go over that explanation we have over here. I will click on show all and I will scroll lower and I will click on view more. This will open the website of Binance, and here we have a nice graph that will give you an idea what the trading stop loss is. Imagine you purchase an asset at 8,500. Let's say this was the Bitcoin. You can set a trailing stop loss below the price you buy. So if the price moves in your favor, the stop loss will move automatically and it will keep a distance. In this example, it is a 5% trailing delta distance, but it will keep a certain distance from the highest point that the price reached. If the price reverses and goes down, the stop loss will not move. If the price continues higher, the stop loss will move accordingly and it will stop at the next peak. If the price goes back and hits the stop loss, you will secure a profit if the price is higher from the level you bought initially. In other words, this is automatic order that will secure some profit in your account whenever the price goes in your favor. It's like securing some percentage as a profit. And if I have to make it really simple, let's say that you are on profit 10%, you can set a stop loss of 1% trailing delta, which means that you will secure the 9% profit with certainty. If the price goes more in your favor, to 12, 15, 20%, the trailing stop loss will just move below the price, and if the price reverses, you will lose just 1% of the profit. The last type of order we have is one cancels the other, or the OCO order. I will tap on that and you will see that I have a limit section and I have a stop limit section as well. Now if I tap on the info, you will see that I have an illustration that is clear enough. So this type of order combines a limit order and a stop limit order. The stop price should be higher than the current price and the limit price should be lower. So if the price goes up to 3,000, with the example we have in the illustration, the stop limit order will be activated. And I already explained what the stop limit order is. And at the very same time, the limit order down at 1500 will be cancelled. If the opposite thing happens and the price goes down to C, the limit order will be executed and the stop limit order, point B, will be cancelled. So it really depends what your strategy is, where you want to buy and how you feel comfortable purchasing Bitcoin or any other crypto on Binance. I use the limit order because I aim to buy the dips and it's really nothing to mess up. It's easy to use, and once you set up the levels, the trading just happens automatically. I really hope that you have found this video useful. If you have, just smash the like button, subscribe for more, and I wish you a wonderful day.